All right, how y'all doing? It's your boy Marvin Jackson, aka the man, the myth, the professor, continuing our educational series. Okay, we are going to go over today how to use a chart. Okay, so this is volume 3 of the series, and we want to make sure we know and understand how to use the chart by me, Marvin Jackson. All right, so what is support? Okay, so this is building off volume 2. So if you don't understand where you're at right now, please watch volume 1 and volume 2 of my playlist because it breaks everything down. Okay, here we go. What is support? Okay, support is a price level where a downtrend can be expected to pause due to a concentration of demand. Once an area of support has been identified, it can serve as a location in which a position can be exited or entered. Okay, so here we go. Support. All right, I'm going to show you on this here chart. Support, when it runs down into this number, this line here, and it bounces, and then it came back to this line and it bounced, and then it came over here to this line and it bounced. Okay, and it came here again and it bounced. Those areas where the price comes into it and it stops going further down are called support. Okay, that means that there are buyers in that location. There's a demand for the stock at that price. Okay, and that's what they mean. This is the fancy stuff, but I'm always trying to make it real basic. Okay, so here we go. Let me give you some chart examples. Okay, so I got lines drawn. And on this line right here, you can see, look at this. See, the stock came to this price, boom, bounced. Came back to this price, boom, bounced. Okay. Way down the line, days later, I mean, this might cover you a couple months later. Look, came back to this same price, boom, bounced. Came here, had a small bounce, okay, and it finally broke support. When it breaks support, it means that the area that it had been bouncing off of, it failed this time and it dropped lower. But look, here's another support line drawn here, okay, because of this gap. All right, and it came here and it bounced, and it came back slightly and it bounced. So these are all examples of support. Okay, so anytime you see where price touches a certain area and it goes back up, you basically consider that support. Okay, so that's pretty much how that works. We're going to move into the next example. This is the Disney Daily. Sorry about that. I was wondering why. Look, this is the daily. Okay, and here's that price point. These are lower price points. Then I had the hourly. This is the support on the daily, support on the hourly, right? But the time of the process, not the process, but the price was higher. So of course we have these higher levels. So here you go. You see it coming into this line and bouncing here. Okay, it came here, bounced, came again, bounced, came into this line, bounced, came back again, bounced. Then it got weaker, but they're still supported. It bounced here. Okay, then it got weaker again, and it bounced here. But it's interesting. The interesting component is it's bouncing off of these lines of support and resistance that we drew on the daily. And that's the key part that I want you to take away, is so you can understand how support and resistance works. Okay, so we're talking about support right now. This is the same stock on the 15-minute chart, just showing you again how these lines that we drew on the daily are being honored, because of support. Okay, so that's good. Now we understand support. Support is when the stock comes down into an area and people buy it up. Now we want to understand what resistance is. Resistance is nothing more than the opposite of it. Resistance is when, okay, the stock is running up higher and it keeps hitting a wall and it can't go any higher. Okay, so what you will often hear is from time to time, people will talk about a stock breaking out. Like, oh, the stock broke out. That's a big deal because essentially that stock had been hitting resistance and hitting resistance and hitting resistance. So it kept coming up and trying to, let's say the price point that it couldn't break out through was $1, right? It kept coming to like 98.99, hit $1 and come back. And then the second time it come up to 98.99, hit $1 and come back. And then the third time come up to 98.99, hit $1 and come back. That means that that's a hard resistance point, and that they're having a hard time selling through that particular price point. And so this is an example of that. So now we're going to go look at some chart. Oh, well, let me give you the definition first. There we go. Okay, so what is resistance? Okay, so as it states, resistance is a price level where an uptrend can be expected to pause due to a concentration of supply. Once an area of resistance has been identified, it can serve as a location in which a position can be exited or entered. Okay, so again, basically, make a long story short, resistance is when price can't go past a certain point. Okay, so we come here, look, didn't get all the way to the line, but it came back. Came up here, touched the line, 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 tried to peek a little bit more, came all the way back, right? Fell through all of this support here. Okay, so that means that at this location, people are very willing to sell for whatever their reasons may be. Okay, it could be because there were some people who bought back here at like $13 and the stock crash, and so every time it gets close enough to where they can have a be comfortable with the loss, then of course they just sell off. Okay, so it can be all kind of reasons, but the bottom line is it's resistance. Okay, and then all of a sudden we see here it took it a while, but boom, what did it do? It broke out and it ran. It broke through resistance, and of course they say old resistance is new support. So what happens? It runs through here. When it came back, where it came back to? Come back to this old resistance point that now serves as support. Okay, and so it's just important. It's very important that you understand these concepts. Just as a trader, you got the support and resistance is just basics 101. Okay, here's an example of the. Let's see what stock is this. This is GE, General Electric. Okay, here's the same stock. That was General Electric on the daily. Now this is General Electric on the hourly. Okay, and look, boom, here's it goes slamming into that resistance. Hit a resistance point here. Okay, and then of course this is that breakout we were talking about, right? And then up here, boom, resistance, boom, resistance. Okay, so those are examples. And then this is the same stock on a 15-minute chart, just to show you that you can see these on multiple time frames. Okay, came up in here, boom, slammed back down. Came up in here, boom, slammed back down. Right, and then you can see the downtrend working because you got what they call lower highs happening. Okay, but those are just examples that I wanted to make sure you understand. So that's support and that's resistance. Very important that we understand those two concepts. Okay. Right. Okay, this is good. Now, we're going to, let me go ahead and back out a little bit. And the next thing we're going to talk about is a couple indicators that really matter. So we know what support is, we know what resistance is. The next thing I'm going to talk about is moving averages. Moving averages are very important, okay? People love to use these all the time. Traders, I should say, use these all the time when they're trading. In fact, you can use them to identify a trend. The whole point of a moving average is to identify a trend, okay? So let's go ahead and let's find out what those are. Let's get some definitions. Let's make it make sense. All right. Here we go. Here we go. What is, my friends, a moving average? Okay, here we go. So it says this simply. A moving average is a widely used indicator in technical analysis that follows the trend of a stock's past prices. There are two commonly used moving average indicators. Okay, so basically the first thing is it's a indicator that's used in technical analysis that shows you the trend of a stock's past prices. Okay. Let's talk about those two types of moving average. There is the simple moving average, okay, the SMA, which is the simple average of a stock over a defined number of days. So it's something that looks at, oh, let's say you said the past 20 days, I want to know. Excuse me, I'm tired, man. It's a late night and it's a long day, but it's all good. I'm going to get this information out. Back to what I was saying. Simple moving average. It's the average of the stock over a defined number of days. So if you want to say, well, what was the average stock's price over the last 20 days? The simple moving average will give you the last 20 days. If you wanted 50 days, it'll give you 50. 200 to give you 2. It'll show you where the stock is moving, which helps you to identify trend. Okay, the other type is the exponential moving average. I don't use this. I use the SMA personally, but this is also another type of average. Okay, which gives greater weight to a stock's recent. So it does the same thing. Okay, it tracks the average prices of a stock over a limit X amount of days, but it gives greater weight to a stock that's recent prices. Let me say that again. It gives greater weight to a stock's recent prices over a defined number of days. So it's going to really weigh heavier the last couple of days as opposed to the whole 50-day or 20-day period. Okay. Whether you use the simple or exponential, most technical traders use these three indicators, these three time frames: the 20, the 50, and the 200. 20, 50, then 200. And if you're a day trader, you'll probably have a 10. I use 10, 20, and 200. Personally, I don't need the 50, but I use the 10, 20, and 200 for my personal use. So let's go look at that. This this chart right here shows you. Look, this is the 10 MA and this is the 20 SMA, simple moving average. So what's going with this is it follows the price, right? See how here it's behind the candle. So it's a measurement of the past. It can't measure the future, but it measures the past. Okay, and so you can see how the stock was running up and then it got sideways and then it bounced and it got sideways into the average and it actually dipped below, but then it bounced again and it got. You can use these as indicators on whether the stock is bullish or bearish. Usually, generally speaking, when the price is above the 20 MA, it's bullish. And when the price is below the 20 MA, depending on how far below, it's a sign of either a reversal or the fact that the stock is bearish. Okay, so I just want to make sure we understand how that works. So here we go. On my charts, I have the 10. I put my 10 in yellow. Okay, and that's because I day trade. I have the 20, which is in blue, and then I have the 200, which is in red. And whenever you switch your charts, it'll be on every time frame. Doesn't matter. Okay, so look at this. We see through here that it was had a good little run above it, little bullish run, and it really got above. Okay, and this is Under Armour that we're looking at, and then boom, it's really good. All this time that it's above the 20 MA, that means it's bullish. Okay, and we see here it got up here and it peaked, and then man, look at this massive gap down. Now it's below the 20. See how the price is now dropping dramatically. Okay, boom. This means that it's bearish because it's below the 20. So people will trade. There's some people who have trading strategies and systems that are established based on this very simple 20 MA. They take it when it's above and they short it when it's below. And that's a great strategy if that works for you. Everyone has their own way of doing things. There's no one way in this trading world, but I just want you to understand the basics, okay? So this is pretty much a good gauge. I want to mention this. I'm going to go to the daily time frame. Oh, this is the daily time frame. Whenever the 20 MA crosses, let me say it this way. Whenever the 20 MA crosses the 200 MA in a downward trend, that is called the death kiss, my friends. And that means that the stock is going to be bearish for a while. Okay. And this is something because I am making this video in the middle of the coronavirus, the COVID-19 outbreak, and the markets have gone to crap. Well, if you look at the Dow Jones or the SPY, you'll see that the 20 MA on a daily has crossed the 200. That means that there will be some bearishness setting in, and it may take us a little while to get out of this bearish trend. Okay, so I just want you guys to understand that and know that. All right, good. Now, VWAP. Okay, this is something else that day traders use. What is VWAP? Okay, this is a very simple, good question. So let's see what the definition is. It says the VWAP stands for volume weighted price, volume weighted average price. Okay, the volume weighted average price is used by traders to give them the average price that a stock has traded at throughout the day based on both volume and price. It provides traders with both the value and trend of a stock for that trading day. This is really good for day traders. Okay, so for some day traders, if prices, let me just add this, for some day traders, if price is below VWAP, then the stock is considered bearish at that time, meaning during that day. And if the price is above VWAP, then the stock is considered bullish at that time or during that day. Okay, you can look at VWAP as another form of support and resistance. Okay, so this is a very powerful indicator that many day traders use. Okay, and I'm going to show you this. Now, remember, my yellow line is my 10 MA. My blue line is my 20 MA. And my red line is the 200. Now look, this particular stock target is on the, this is an intraday chart, meaning this is a 15-minute chart. This is not the daily, but on this intraday chart, the stock, it would be bearish because it's below the 200 and it's below the 20. Okay, at least on this side of it, and then over here it's starting to work its way back. This orange line that might look red to you, the thinner line, this is VWAP. VWAP is what measures the average price with volume included for that day. See, these 20 MAs and 10 MAs and 200, whatever the number is, that's how many days it's averaging. 10 days, 20 days, 200 days. This orange line, this VWAP, this is just averaging that day's production. That and nothing more. Okay, so a lot of traders, day traders, will say, hey, if this thing is above this, then I'm a buyer. But if it's below this, then I'm a short. And if it's way below, I want it to get very far and extend it. Excuse me, again, they wanted to get very far and extend it. Then, of course, they might buy down here thinking that they'll get back to VWAP. But VWAP has always been looked at and used as an indicator on whether for the day if that stock is bearish or bullish. So it's just very important to understand that this really hinges upon a day trading format, not a 10-day period, 20-day or 200-day period. Okay. So now that we've talked about VWAP and you understand moving averages, I'm not going to get into a whole bunch of other indicators because really, for me, I don't use a bunch of other indicators. I really just need to know volume. I like the 10, 20, 200 MA, and VWAP. That's it. Everything else is about price action. Really, all of this is about price action. If you understand support and resistance, all of those components. So let's talk about market hours now. We're going to continue with the education of this. Let's keep it going, okay? So I'm going to come back to, so what is pre and post-market activity, aka extended hours? Okay, so what you need to understand is the market runs between 9:30 a.m. Eastern Standard Time to 4 p.m. Eastern Standard Time. Okay, it's always going to be based off the East Coast. It's very important to know. However, there are what they call pre-market hours and then after hours. So prior to the stock market opening, there are traders who are trading pre-market, and that runs from basically 4 a.m. to 8 and 8 to 9:30 a.m. Okay. Then there's the market hours, and then after hours run from 4 p.m. to 8 p.m. So basically 4 hours after the market closes, I should say, and just about, what is that, 5 hours, 5.5 hours before the market opens. Okay, so that's what that is about. So here we go. Let's go ahead and get a definition. Extended hours. Extended trading occurs during pre-market and after hours. Pre-market times are from, as you can see, I already stated that. During the extended hours, trading is conducted by electronic networks on different exchanges that offer extended hours. So basically, this is not happening on Wall Street's market floor. This is done electronically by people, by exchanges that offer those opportunities. Okay, how do you find extended hours on the chart? Pinning your charting software, you simply have to click the extended hours tab, and that data of the stock's extended hours will show. However, the amount of data showing is dependent upon your subscription plan with your charting software. Okay, So that matters. You can only see the pre-market data on intraday charts. That's important too. You only see pre-market patterns. Price action during on intraday charts. Okay, so let's go give an example of this. You see this in the white. The white is the regular trading hours. The blue is the extended hours. Anything to the left of the white is the pre-market hours prior to the open of the market. Anything to the right of the white is the post-market or after hours. Okay, so I just want to make sure that you understand these, because this is very important to me for my complete trading strategy and what I do. Okay, so this is good that you understand this. Okay, so this particular volume was relatively quick. I just wanted to really go over the basics of a chart. I wanted you to know what support was, what resistance is, what an MA is, meaning a moving average, what VWAP is. I just need to make sure you understand those basics, because without those basics, it's kind of hard for you to even remotely have success, if you will, as a trader, as a day trader. Okay, so let's go ahead while we got a little bit of time and look at a few live examples. Live examples meaning I'm just going to go straight to TradingView, which is the charting software that I utilize. Okay, but like today, these were some of the penny stocks that I was looking at. Right, and this is just the basic outlay of a chart where you have the ticker symbol. Okay, you have the time frame. We can change this time frame from 15 minutes to a minute to whatever you like. Okay, and don't forget this ticker symbol here. This is where you can change into a different stock if you want to look at something different. For example, I want to now look at, let's just say CAPR. You just type it in and literally you hit enter and it takes you right there. It's that simple. Okay, but the other things I want to talk about, indicators. If you wanted to add indicators, you would click on that to add indicators. There's a bunch of different things that you can do here. You can format this chart to have candlesticks or something different if you want to set up price alert. Just kind of giving you a basic rundown. Everything over here on your left, these are all the tools that you have to draw on the chart. This is probably the most used tool for me, which is nothing more than a horizontal line. Okay, you click on that, and then you come on over to the chart, and you just draw the line wherever you see fit. Okay, but that's probably my most used deal, because I draw those lines to dictate where I would be willing to buy a particular stock based off of its pre-market and open market action. Okay, and then down here you see these. This is volume, and it just kind of, you can put this on your, always should have volume on your chart, because it lets you know the amount of volume that a particular stock was putting out. So when you hover over this, you have to, I'm going to draw your attention here. Okay, this is the one where you have volume right here. Okay, VOL. So when you put your ticker, your scroll over a particular volume candle, it shows you over here in that top left hand corner where it says volume, how much volume passed through that particular stock. So anyhow, this is always good to gauge and understand. These are just kind of the basics of a chart. I just don't want people to be frightened away. They see these and they're like, what in the heck is this? But if you watch volume 1, volume 2, and volume 3, you should be right in line with where we're going with this in volume. Well, this is volume 3, and then of course tomorrow I'm gonna post, volume 4. So we're gonna keep this moving, man. We're gonna knock all of this stuff out. My goal is to have the whole series done in 10 days time, and that would be nice. So anyhow, these are just a couple live examples of different plays in GM that we looked at today that didn't pan out, but actually this one panned out. I just didn't get executed. That's a whole nother deal. So before I get to moving into another space, I'm gonna I'm gonna come back here and just, hey, we're gonna wrap this up, and I'm gonna put out volume 4. But this is the basics of understanding a chart, and the most important things that I need anyone to understand is you got to know what support is, you got to know what resistance is. Okay, you got to know how to look at, you got to know what an MA is. Okay, and how to put it on the chart. And you got to know what VWAP is if you're interested in day trading. Okay, homework. What is the homework? The homework is for you to actually go and draw support and resistance on as many charts and as many different time frames as you can, so you can get used to seeing and spotting it. All right, y'all. Well, I hope you like the material that I laid out for you. I hope that you like the way that I deliver it for you. If you have any questions, just shoot them in the chat comment box, and I respond to everybody. I literally respond. So please, stay motivated, stay learning, rewatch the videos so you can have a better understanding, ask questions so you can have a better understanding. And I'm not the only person out here doing this. You can check with other people. I just really like to share this gift, because the stock market can change your life. It really can.